The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
Well, as we wrapped up the month of October on Halloween Tuesday, the grain markets and livestock were pretty quiet. Not much to write home about, but we're going to try to make sense of what we're seeing right now and have a conversation with Jim McCormick from agmarket.net joining us for our market analysis here today. Jim, always good to talk with you. Hopefully you got some Halloween candy coming your way later on today by chance.
Well, we know they will be doing full force trick-or-treating here in Northern Illinois, but the reality is it is going to be one of the colder ones. They tell us we've got snow blowing here outside of Chicago suburbs, and they're talking wind chills in the 20s. So my youngest is a senior in high school, so I will not be having to do the walk around the neighborhood, but I'm assuming it's going to be a little bit lightly, a little bit lighter than normal, except for maybe the diehard kids. I'm sure there'll be a few of them out there.
Yeah, I agree. More Snickers and Twix and Kit Kats and et cetera for ourselves than it sounds like for you and me both. Well, I kind of stalling a little bit because the markets on Tuesday, rounding out the month of October, there just wasn't a whole lot going on. But we're going to try to make sense of something here. Quietly higher-ish in soybeans and corn. I know the dollar index moved higher about mid-session Tuesday, and I guess my first question to you, was that the cause or the excuse as to why the grain markets kind of pulled back late in the session on Tuesday, Jim?
I would say the reality is it probably was a little bit of resistance. I mean, when the dollar goes up, it makes us a little bit less competitive. And let's face it, Jesse, we have not been very competitive on the export side of the equation as a whole. So I think that was part of it. And I think part of the reality is we are just kind of stuck on these markets kind of in the near-term range. I think we pretty much call it price equilibrium at the moment. The bulls, there's just not enough to feed it at the moment. Weather in South America is kind of in the eye of the beholder, I would argue. Southern Brazil is a little bit too wet. Northern Brazil is maybe a little bit too dry, but there is rain in the forecast, kind of like we had this summer in June where it kept saying, well, the rain's coming, but it's 5 to 10 days out. But there is some rain in the forecast. And Argentina, which has been dry, is starting to get some rain. Not enough to quench the drought, but getting it. So there's just not enough to really get a hold of the market one way or another. But on the other hand, on the bearish side of the equation, we are really moving through this harvest fast, except for maybe the far eastern portion of the Corn Belt. And, a lot of farmers have put away the combines, the grains in the bin. And traditionally right now, once you get to that step of the equation, farmers tend to want to hold off and, forestall any more marketing till the calendar flips. Lots of reasons for tax purposes. So now the market, that's going to kind of keep a floor on the bottom side, I believe, because the end users are going to have to try to get this market up, up a little bit to keep at least the domestic demand flowing. Because in general, ethanol grind as well as the bean crush is still very, very strong.
Well, this corn market especially, I mean, just not going anywhere. A couple of set trading range. We had that pop towards $5, and then we gave it all back pretty much immediately, so we couldn't break through some overhead resistance. I just wonder, Jim, in this corn market in particular, could farmers maybe get lulled to sleep a little bit with just how boring it has been? It's tough for us to try and make it exciting to talk about, but I don't want to lose sight of risk management here. Could folks get kind of lulled to sleep here with 480 D's corn and right at around $5 March corn, et cetera?
Well, I think that's definitely can be happening because when the market's very quiet, people tend to turn off the radio. Maybe they're not listening to the newsletters that like we send out and other advisory services send out. And it's not, and it's just that time of year. It's been a very grueling time of year. A lot of producers put in a lot of long days, long nights in certain locations on top of it. So yeah. But it's something that producers definitely need to be cognizant of. I mean, I am very nervous, Jesse, that we're seeing a change in I don't know if philosophy is the right word, but kind of the mentality of what's happening. The last couple of years, you've had an inverted market where the spot price was trading premium to the deferred, as the market was essentially doing everything it can, especially in the corn market, to pull grain forward away from the farmer's hands. Right now, when you look at the market, there's carries in the market. There's a 14 and a half cent carry and the decent corn to the March corn. So what that's telling the producers is, hey, I don't want the corn here right now on October 31st, November 1. I'm going to pay you 15 cents to store it into March, and I'm going to pay you a little bit more to get you into May. And that's kind of lulls that, like you said, lulling the farmer to sleep maybe is a good way to put it, because it's like, hey, look, the market's paying me to store it. And it is. But the problem is, if we're switching this from a bull market to a bear market, and with a 2.1 plus billion carryout, I think you could argue we're transitioning to a bear market without a severe weather problem in South America. That what happens then is the spot month tends to fall to where the previous month went off the board. In this case, September corn went off the board around 463. Decent corn had a fall low of 467. If we are moving into a traditional bear market, decent corn could easily fall and test that fall low. And then what happens is decent corn goes off the board around Thanksgiving, let's say around 470. Then that March corn, which is currently trading at 5, guess where it's at when it falls by February expiration? It ends up trading closer to 470, all things equal. So that carry that's there, that's encouraging you to store it, essentially disappears, and all of a sudden you get to the spring and you're getting 460, 470 corn, the same price you could get today, but you got storage fees if you have it in commercial storage. But even if you don't have it in commercial storage, the interest on your money, because we are in a new interest game that we haven't seen in 15, 16, 18 years. Storing corn on farm is going to cost you 3.5 cents to 4 cents a month. Storing beans on farm is going to run you 8.5 to 9 cents. So if you store those beans 3, 4, 5 months out into the spring, you know that rally may only be 50 cents, and you might have given up that rally's profitability just on interest charges. So the game is definitely changing, and I think to answer your question, they got to be very cautious of not getting lulled to sleep because of the market is relatively boring, to be quite honest.
Well, and to that point as well, not getting lulled to sleep, because I hear a lot of talk that there's plenty of farmers who are woefully undersold with this current crop and haven't even thought about next year, 24, pricing anything in, even if they're starting to think about seed decisions and fertilizer and more. So I just wonder if folks are waiting for some sort of bullish news or a black swan, or just waiting for something else here, potentially, if they are undersold on corn or soybeans right now, especially for this current marketing year here, Jim.
Well, I would think right now part of the problem we've got is the market did go quiet. I mean, we've been trading the same price now for what, 30, 90 days now, probably. So,
something like that,
the farmer hasn't lost much money, hasn't made much money holding on to the grain. It's just sitting there. And I think he is waiting for something to happen, and something could happen. I mean, South American weather is far from ideal. Argentina is improving, so that might come off the board. The one thing we would watch, but you got to be, it's going to take time to develop, is the South America bean crop. It's getting planted late. If it would get planted late, harvested late, that means the safrinha crop goes in late. And in theory, you could run out of water and shorten the Brazilian crop up by quite a bit. But Jesse, let's be honest, we are not even going to know where that's at for another 6 months. So you're playing that waiting game for 6 months. The other thing that producers are waiting for, that's, the last couple of years have been very, very good for the producer that just threw the grain in the bin and we had a rally. But what caused those rallies? Well, we had the Ukrainian war. Wheat's now trading on 1.5 year lows, way off the year, war premium's gone. We had production problems in Argentina last year. The year before that, we had production problems in Brazil. So we had supply situations that gave the market a reason to rally. And right now, the producers, I think, are waiting for that reason to rally, to develop. And it has. The risk we have right now, though, is that reason that rallied it the last couple of years does not come to fruition this year. And then when you look at, and especially on the corn side of the situation, it's a little bit more tough than the beans, because when you're looking at about 2.2 billion carryout, you're looking at stocks to use around 15%. By all historical measures, we should be closer to 4, not 5. With these stocks to use right now. So, without a weather play, this market eventually could succumb to lower prices, especially if the market realizes South America's got a decent crop. Beans, Their ending stocks are a lot tighter, so it's a little bit more touch and go for the beans.
We're having a conversation today with Jim McCormick from agmarket.net. Jim, let's talk a little bit more about soybeans. I personally am a little more bullish this bean market here in the short term because we're hearing a lot of this chatter about expanded crush, more meal demand for the U.S. Obviously, the soybean meal market's been on a bit of a parabolic rise here as of late, and that's supported soybeans themselves. Talk of China looking for some U.S. Gulf offers and more. A tight balance sheet in the U.S. To your points, we got to wait for South America's crop to shake out here a little bit more. It's still early there, but I guess I'm a little more bullish when I look at soybean charts and the overall mindset of the soy complex. Are you kind of in the same camp, or what's your take as you look at soybean charts right now?
I'm in the same camp as you. I mean, if I got to pick something I'm more friendly in, either as beans or corn, it is the beans, no doubt. Your carryout's 220 million. That's pipeline level. It's argumentative if it's 220 million. Remember, Jesse, they lowered the export number on this last WASD number, and I don't think they needed to do it. I think they did it to try to keep this balance sheet intact. And in essence, they didn't want to drop that carryout below 220. The demand is around. Argentina is out of beans by all accounts. There's been several CEOs of ag trading companies that have said that the Argentinians are out of beans. That's going to help drive the bean meal up. That's why bean meal is where it's at. Now the question is, can we get another gear higher in the meal? That's where it gets a little bit debatable. We have seen a little bit of demand shift away from meal to distillers grains, but that meal market's going to remain very, very tight for another 3-4 months. That should help keep a bid under the U.S. market. And then the other thing is, like you said, is South America. Brazil is still trying to plant the crop. Southern Brazil is too wet. There's talk about replanting in southern Brazil due to flooding. Northern Brazil, Mato Grosso, one of the biggest states out there, they're still dealing with some extremely dry weather. Now, they are trying to get the crop planted, but heat's becoming a problem. They've got extremely hot temperatures there as well. So if that crop starts to shrink back, it should drive more demand here. The balance sheet in the U.S. is incredibly tight. The balance sheet in the world doesn't look so bad. It's about a 15 million projected 16 million increase year on year. But that's all betting on South America's crop's going to be there. And like we said, we're just in the very beginning stages. So if the market senses that, that should give the bean market a little bit of a rise. And if it does, it should hopefully pull the corn market up. But like I said in an earlier part of the segment, when you're looking at a 2.1, 2.2 carry out of corn, you've got to be realistic. Corn is not going to go to $5.56, in my opinion, unless something really changes dramatically. The last couple of years, that change came with China buying a lot of U.S. corn. With China buying, 8-9 million metric tons of Brazilian corn already, the odds of them coming in and buying a lot of U.S. corn, unfortunately, to me, seems a little bit unlikely. They may buy some bushels, but not game changer amounts, in my opinion.
I was a bit surprised on Tuesday as well with just how quiet things were. Typically, the end of the month, you'll see some of that volatility and positioning and whatnot, some of the outside market pressures. But I wonder if the outside markets are waiting with bated breath to see the Fed wrap up their 2-day meeting on Wednesday. We don't expect an interest rate hike this month, but we know there's more on the table potentially. And I think a lot of folks are waiting to see the comments from the Fed Wednesday afternoon. And I'm wondering if maybe that put a little bit of a limit right now on some of the outside market moves, wrapping up 1 month and rolling into the month of November, Jim.
Oh, there's no doubt about it. I mean, you look at the stock market yesterday, Jesse, it went ballistic. It had a flat 500 plus move. Today it was relatively quiet. I think a lot of traders have moved to the sideline. The Fed rate increase is not expected or expected to leave it unchanged. The real question is going to be the verbiage. Will they leave it open to raising interest rates? I think that's kind of how they're going to verbiage it. Like they're going to be open. I mean, the market right now, the world market is in a very tough dynamic, in my opinion, to try to pin down. You've got the war in the Ukraine. You've got the war now in the Middle East that could spin out of control, which really could have an impact on the oil market if Iran would get involved in this, being that, the Straits of Hormuz could get shut down. So you've got that going on. The UAW just got they just got all their strike is now off on all those plants, and they're all getting pay raises. So you're going to see a little bit more continue to see price inflation on the income front. Now that's good for people who have jobs. People want to get paid more, especially when prices of food and everything's life is expensive. But it is kind of a circular type of situation. You get inflation pressure on wages, then it spills over into more consumer demand, and then the Fed's got to raise interest rates because they're still trying to get this interest rate down. Now, it's not near as bad as it was a year ago, but the fact is interest rates are still, or not interest, excuse me, inflation is still running a little bit hotter than they want. So they're still trying to put the gas or put the brake on this economy, but without putting us in a recession. And, they've got a tough job ahead of us. So a little bit of pause. We'll see what they say tomorrow in their comments.
Livestock, let's wrap up there. Hogs look like they maybe found a little bit of footing, maybe a bottom here in the hog trade the last few sessions. Cattle, kind of a mixed bag there. I wonder if we have seen the top in the cattle market and maybe we're settling into a new range here. Just your thoughts in this protein sector overall as you look at cattle and hogs. Any notes that stand out to you right now, Jim?
Well, the hogs had a pretty good run here recently. They were trading at quite a bit discount to the cash market. They narrowed that up. I think that may be enough for the hogs near term. I mean, supply is still plentiful. We know we got a big supply of hogs in China. China hogs prices are dropping a little bit. They're dealing with some African swine flu headlines. That's forcing some of their producers to dump hogs onto the market, which is driving the prices down. So hogs might have topped out. Cattle, I think we're probably more in a sideways range. I think we've at least seen our near-term highs for the time being. Now, we know that supply is going to tighten. We actually try to rebuild the herd. But near term, I think the consumer is really going to be stretched. I think he's going to try to have a happy Christmas. I think he's going to splurge a little bit right now. But by all accounts, the consumer is getting a little bit stretched. And I think that will limit cattle, especially once we get through the holiday season. I think the demand for beef will just start to slow down as consumers try to downshift to maybe a little bit cheaper protein to try to get their spending a little bit better in check.
Jim, before we let you go, any final thoughts you want to share or reiterate with folks as they're watching their marketing plans right now?
I think the one thing I do on the marketing plans, I do reiterate, folks, is it is very quiet, like Jesse mentioned. It is dead quiet. But this is one of the times when maybe you want to talk to your advisors or even your elevators. We like to call it, put your wish orders in. You're going to get weird flukes in the market. With the world we're in right now, the headlines we're seeing, you saw week and a half ago, corn made a surge over $5. We had several clients, quite a few clients that sold corn on that rally. But the reality is you had to make that decision beforehand. By the time the market made the decision to sell it, the rally was gone within a day. So if you got price targets that you're happy with, be it the 23 crop or even the 24 crop, get those orders working because rallies do happen, but they tend to be quick in nature and then they tend to give it back in quick in nature. So, develop that game plan. If you got any problem, any questions, call any of the ag market brokers at 844-424-6758 or go to agmarket.net and we'll be happy to help you.
Fantastic. Jim McCormick with agmarket.net. Always a pleasure to talk with you, sir. Have a great week, and we'll look forward to talking to you again down the road. Thanks so much.
Thank you again, Jesse, and happy Halloween out there.
That's going to do it for Market Talk here today on this Halloween Tuesday. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.